Siddharth Khemka, Head of Research, Wealth Management, and Motilal Oswal is now joining in. Siddharth, what's the view that you all are taking on the frenzied rise that we've seen in gold prices? And some of these gold financiers have had a good run. So Manappuram, Muthoot are both up 50% this year, while some of these gold jewelry companies, whether it's a Titan, Kalyan, Senco, no such luck. So what's the best way to play it? And then the view on gold from here.
Well, good morning, Rima. First of all, wishing you and the entire CNBC TV18 team a very happy and prosperous Diwali. Wishing the same for all the viewers of CNBC TV18. So I think we remain constructive on gold. We believe that there's a structural shift that central banks across globally are taking a step of the de-dollarization where gold fits in well. And I think the buying continuously happening on the central banks, including the larger ones like some of the BRICS countries, including China, India, Brazil. I think that would continue to keep the prices firm. And the best way to play, you rightly said, yes, one of the best ways to play the rising gold prices is through the gold financials companies. On the existing loans, the LTV improves, so the delinquencies comes down, the asset quality improves. But for the newer growth as well, with the same gold volumes or the quantity, now you can lend much more. So the lending propensity that increases. So overall, very positive from gold financing companies. Another way to play is through the commodity exchange MCX. I think there also the gold volumes, the precious commodities volumes have been over there, and I think that would continue to do a positive effect on MCX as well.
Hey Sid, good morning. Festivities are here. Bulls are feeling good. What about Eternal? Yesterday it had massive volumes in the last 40 minutes or so as we dissected those numbers. For a longer-term investor, they would like the trajectory that they've laid out. The problem is in the near term, there's going to be a lot of focus on growth, which in turn could delay profitability. What's your take on the stock at around 340 rupees?
Good morning, Nigel. I have festive seasons here, so wishing you and the entire CNBC TV team happy Diwali. Eternal, I think, still in the investment phase. I think results were mixed in some sense. Revenue were far ahead of our expectations, but the food delivery order value, that was a big miss. If you see the food delivery, the growth remains soft as muted discretionary demand. That kind of impacted. I think what we're seeing is that post the GST rate cut, the demand has definitely picked up. So Q3 could see some acceleration in terms of growth. The good part about the results, margins, EBITDA margins that improved by 5 to 5.3%, and the long-term GOV growth target of about 20%. But for FY26, it is expected to be closer to about 15%. So I think net-net, the quick commerce expansion that continues aggressively. So the medium-term margins that will be a little bit more under pressure, but that tailwind is expected to start kicking in FY27. So the platform fee hike that supports margin improvement growth. I think from Q3 that will see some improvement. So I think overall near term, driven by the higher investments, the stock could remain a bit softer given the run up that it has already seen. But the long-term growth story that continues to remain intact. We have a buy rating and a target price of 410 on Eternal.
Siddharth, just moving on to another sector, Jio Financial. I believe you were listening in to the conference call, and it's also, the company's hit an inflection point in its business where now the business income is more than the treasury income. What were your takeaways from the numbers and what does it mean for the stock?
Yeah, so I think if you look at overall, we tried and listen to the Jio Financial numbers before the Reliance numbers coming in. So the company has been focused on setting up the newer segments and nurturing them and gradually expanding over the past 2 years. They have strong foundation that has been built. In terms of financial performance, I think there is a good growth that we are seeing. Total income grew about 44%. The pre-operating profit was a bit flattish because of the higher costs. The company, we believe, is reaching at an inflection point where the business income is now higher than the treasury income, given that they have a large treasury of Reliance shares, and that is the core income that they are getting. So I think gradually the core business, that is of the lending on the other operating businesses, that is definitely picking up well, and we believe that the company, given it's well capitalized, they also issued recently the preferential issues to the promoters. So well capitalized for the growth. Businesses are setting, so see strong growth for Jio Financial going forward.